All right. All right, sorry, I'm trying to do 12 things at one time. All right. All right, so we got a lot of people that had green days today. So the market's actually been acting okay. Which is weird. It's weird right now. It's weird. We're in a weird situation. Market should be going down. Market is staying flat. Market's really not going up. Nvidia's kind of propping up the market, but we don't know what's going to happen after this week. We don't know. It's 50-50, guys. 50-50. It's 50-50 which direction this market might go. All right. With the volatility in the market, in my humble opinion, you guys should either be intraday trading or you should be investing. Investing or intraday trading. Swing trading, you're getting choppy jalopy. You're getting chopped up. Option plays overnight, you're getting chopped up. Even intraday trading, guys, you're getting chopped up. Intraday trading, guys, is providing you 8 different trades a day. Guys, I'm seeing 7 to 8 trades a day intraday trading. That's how volatile the market is. So where normally we would get about 2 to 4 trades in the futures market, you're getting 8. All right, so even if you missed the morning session, even the 12 to 2 session is giving you money. That's how you know it's volatile. You can trade. You can literally just come in the market. You see something you like, you can trade it. If you're trying to make that $100 a day, I keep telling you guys to learn the futures market. If you learn the futures market, guys, you can take singles in the market. You can take singles. And you don't have to spend, it doesn't have to be that volatile. Like, yes, I trade the NQs. I get it, right? The NQs is probably going to be one of the most volatile ones that are out there. And then I'm buying multiple contracts as well. So it can be expensive. It costs like $4,500 a contract. But you can trade the Russell 2000. Guys, I don't even know if you know this. You can trade crypto futures. So anyone that wants to, so nowadays, guys, if you guys want me to look at, like, let's say you want me to look at Bitcoin for the day, I can pull up the crypto futures. Let's say you want to look at Solana. Guys, did y'all know that there's a Solana futures? There's an Ethereum futures. There's a Ripple, a Ripple XRP futures contract that you can trade. And they are really, really inexpensive. I think I looked it up today, in the Solana, one contract of Solana was like $100 and something. So everybody in here can, well, you're not going to make much money, but you can still trade the futures market and not feel like you need, so much money to do it, right? Which is why you should know how to do futures, you should know how to do options, and you should know how to trade the original stock market, all right? So what were some of you guys' wins today? I know you guys had green days. What were some of your stocks that did really well today? I saw the airlines were up, which is also a little weird, because you're like, usually when oil goes up, airlines go down big time. So it's a crazy world that we're living in right now. But I see that Delta was up today. I saw Uber. Guys, Uber just struck a deal with Nvidia. So Nvidia is striking a deal with everybody. Like, if you don't work with Nvidia, you ain't trying to make no money, right? So Nvidia just struck a deal with Uber. So there's a lot of stuff going on out there in these stock market streets. There's so much money to be made in all different areas. But what I want you guys to do, you made 100% return on a SPY put. Woohoo! All right, that's that millionaire challenge trade. You got to let me know what strike that was, because I didn't even see it. But I'll pull it up in a second. All right, but happy St. Patrick's Day, guys. Happy Tuesday. Even if you don't celebrate it because of what it's about, I get it. I understand. Look, life is short. All right, there's so many people around me, so many people around you guys, loved ones passing, at unexpected times, we get angry, we get, we have all this pent up energy towards each other. And I'm like, guys, life is short. Life is short. Like, I try to celebrate everything. I don't really get into the deep details of why certain celebrations are even made anymore. Cause then I would just not be, I'll just be one of those humbug, just angry, mad, like all the time. Like every time I try to celebrate something, somebody gotta tell me the awful story behind why that's being celebrated. Joe, your birthday, you shouldn't be celebrating your birthday because and then they'll go on and on about why I can't even celebrate my own birthday. I'm like, man, I'm celebrating everything. All right, so, whether you believe in it or not, it's not even about that. It's about just being positive. It's about just embracing whatever's happening around you and maybe just embracing the good in it, right? Maybe cut out the bad and embracing the good, right? I try to find the good in everything. But these history lessons for everything that I do on a daily basis, I get it. I live in America. We live in the worst country ever that did the worst things, especially to my ancestors. I get all this. I understand history. I read books. All right. But that shouldn't stop me from being happy and celebrating, right? So, whatever. All right. Now, I did take my ancestry DNA, guys, and my wife talks about me all the time because I thought that these high cheekbones came from Indian in my family. And all these years I've been telling everybody about the Indianness in my family. If I had hair, you would see, my Indian hair. Come to find out, like 18% of my DNA is Irish. So my wife makes fun of me all the time. So about having so much Irish in my family. So I guess those cousins of mine, those grandparents that I thought was Indian, they was probably just mixed. They was probably Irish and black, posing as Indians. I thought I had Cherokee in my family. Come to find out, it's actually Irish. All right, so I can celebrate St. Patrick's Day because of the luck of the Irish also, right? Anyway, like I said, I always find the humor in everything. All right, but let's talk about today, right? Let's talk about what's going on today. Today was pretty positive. A lot of people made money today. I didn't really see too many people that didn't do well. And even if you didn't do well today, the market didn't bust you up so much that you're down like big. So it was a pretty positive day, despite the fact of the war that's going on and everything else that's going on around us. Even in Atlanta, like yesterday, 4 o'clock in the morning, I woke up to an alarm telling me that you got 10 to 15 minutes to go find a basement because there's a tornado in your area. So the phone goes off. I jump up, I run, grab the pets. They don't know what's going on. And anytime you need to grab them because of something and you see fear, they see fear in your eyes, they ain't gonna let you grab them. So I'm running around the house trying to grab the pets, trying to get to safety. And we actually heard something. I don't know if it was a tornado or not, but they said it came, close to where I live. And it blew over. And everybody was okay. But like I said, guys, life is short. You never know. You could just be sleeping in your bed one day and a tornado just shows up, right? Out of nowhere. So hug your loved ones. Try to, if you do have any hate towards anybody, lighten it up a little bit. It probably really ain't even that serious in the first place. And let's get this money, all right? Let's get this money. So let me go ahead and pull up a chart. So this is Apple. Let me log into my Thinkorswim real quick. I try to do it now as we come on because Thinkorswim does take up a lot of bandwidth. And with it taking up a lot of bandwidth, sometimes it can cause this TikTok to be like, yo, all this information you pulling in from this Thinkorswim platform. Don't mind. I got about 15 people in my house right now. And if you know my family, they are loud. All right. Let me pull this up. In the meantime, put the stocks that you guys want me to look in the comment section. Oh, okay. I see Social Lily said she took profits on Uber, Applied Digital. Hold on. Uber, Applied Digital, SanDisk, and MongoDB. All right, we'll take a look at all of those. All right, let me pull up your charts. Let me know if you can hear these jokers in the background. If you can hear people talking in the background, let me know. And I can go in there and yell at them real quick. Yes. Hey, Zane. Hey, Zane. Hey, Zane. Hold on for a sec. They say they can hear y'all.
Oh, sorry.
All right. Let me see if this works. All right, cool. All right, so let's start with our traders, right? So our traders that was trying to make $100 a day. You say, damn, you deaf. Right. Hey, that's just how it is. All right, so let's look at some of the day trades of the day, right? So for you guys that don't understand what $100 a day is, right? $100 a day is when we're trading the futures market, and we're gonna pull up the ESs, right? So I was trading the NASDAQ. So the reason why a lot of you guys need to trade the futures is because the futures is open 23 hours a day for you 9 to 5ers. This is the perfect tool to use to be able to trade just about any time. You know, you can trade after hours, you can trade before hours. But what you're trading is you can trade the indexes and you can trade the commodities. So right now you have the MESs, we have the micros. So a lot of the indexes that are out there, like the ES, the YM, the NQs, if you put an M in front of those futures, you would pull up the micros. The micros are 1/10 the size of the large ones, all right? So most of us are not going to trade the large futures contracts because those futures contracts cost like $40,000, right? But most of us can afford the smaller ones. So the micro futures, this one, the MES, is going to cost you $24.64. I remember just last week it was $23.58, I believe it was, right? Just in a week, you need about $100 extra just to trade the MESs. Now, the reason for that is because when volatility goes up, contract prices go up. When volatility goes up, contract prices go up. Just last week, it was $23.58 to be able to trade one contract. And every dollar move, you make $5. Every dollar move, you make $5. So remember how I told you guys, so this is the MESs, which is the S&P 500. And if you notice, guys, the S&P 500 is coming up against the 200-day moving average. Now, what direction is True Blue angled? What direction is True Blue angled? It's angled up. You see how it's angled up? So True Blue is angled up. So you're dealing with a bullish index. You're dealing with a bullish economy right now. All right, the MESs is basically the S&P 500. If you look up the S&P 500, the SPYs and the MES, they're not going to be exact numbers, but they're going to run together because they're the same thing. Okay? So what everyone has noticed that's been trading long term, or not even long term, short term, we have been in a downtrend. We have been in a downtrend since February, guys. Since January the 28th, the spiders or the micro or the S&P 500 has been going down. This is a day chart. All right, we've been going down slowly all the way to the 200-day. Now, some people took a shot and either bought this because you can buy this as an index. Some people bought call options. I tell you guys to wait until we break through this trend. If you break through this line here and the price breaks this price right here. So for you guys that are new, that are just coming in, you're looking at a stock chart. The stock chart is showing you how the S&P 500 dropped from about 7,043. And right now we're sitting at 67.68 or 67.70. So just for some quick math, let's say you lucked up and you said, ooh, I wanted to short this when we hit the highs at 7,043. If you make, I want you guys to do the math for me. If you make $5, if you make $5 per $1 move, and these are for people that don't, so I want you guys to see this. If I made $5, per dollar move, and I decided to short this, if I wanted to short this, guys, let's say at 7,043, this number right here, 7043. Let's say you started shorting it that day and you took profit today. How many points did it drop? Not how much money you made. How many points did it drop? How many points did the S&P drop from 7,043 to 6,770? All it is math, guys. You just subtract 7,043 from 6,770. The answer is 273. Does everybody understand what we just did? Let's say you decided that you wanted to short, and from January the 28th all the way until now, you decide to take take profit today. You can bet on the market going up, or you can bet on the market going down. Now, 273 points is how much it dropped from 7,043 to 6,770. Does anyone remember how much money you make per point? How much money do you make per point move? Per dollar move, how much money do you make?
It's 110.
You make $5. So to figure out how much you make in the futures market, guys, is very simple. You take how many points the move was, and then you multiply it times how much do you make per dollar move. Well, it dropped 273 points. I make $5 a point. So that's 273 times 5. Does anyone know the math behind that? What is 273 times 5? $1,365. I'm just going to believe you, S. Mickens. I don't know if it's the correct answer, but it looks about right. You could have made $1,365 in the futures market betting on it going down in value. Now, here's the $1,000,000 question. How much money did I need in my account to take that trade? Does everyone remember what the margin requirement was?
Is it 24?
Does everyone remember what the margin requirement was?
Is it 24?
Nope. The margin requirement to buy one contract of the MES. How much money did I need in my account?
24.
24.64. Good job, Arwen. In order to take this trade, I needed $2,464 in my account. You could have bet on the market going down, guys, and you could have made over a 50% return in the futures market. You needed 2,400, you had it. It dropped 273 points times 5. You decided, man, I'm gonna cash in. Now you're gonna look in your account and it's gonna have an additional 1,365 on top of what was already there. You're not gonna debit 2,464. You just needed to have that in your account. Even if you had $2,465 and you was able to buy it and cover the commission, you're going to have $1,365 on top of that $2,464. So you didn't make the $2,464. You just had to have that in your account. Your profit would have been $1,365 betting on the market going down in value. Don't worry about why you're able to make money on it going down. I know some of you guys are like, how can you make money on something going down in value, Joe? Don't worry about that. Just worry about how much it moved and how much you make per point. That's all that matters. And you can do that on a daily basis. In fact, let's see how much money we could have made intraday trading. For those intraday traders that want to make $100 a day, is it possible to make $100 a day with $2,464? Well, if we want to make $100, how many points do we need to make, guys? How many points is going to equal $100? How many points do you need to make $100? Safari got it. 20. Why do you need 20 points? Because you make $5 per $1 move. So before you even trade, guys, you got to look and you got to see how much does the MES, how many points does the MES move on a daily basis? You can find that by looking at the ATR, which is the average true range. The average true range of the micro ES on a daily basis, guys, is 100 points. The MES, guys, moves 100 points on average a day. The MES on average moves 100 points a day. Now, what if you got the full 100 points? What if you got the full 100 points in a day? What's your possibility? What's like the highest possibility of the amount of money you can make in a day trading the micro ESs? If you make $5 a day, Safari already got the answer. Safari's on it. The answer is 500. Joe, I don't understand the math. Well, every time the MES moves a dollar, I can be up $5, or guys, I can be down $5. Remember, this goes both ways. You need it to go in your direction, just like you would in a stock. If a stock goes up and I'm betting on it going up, I make money on it going up. If it goes down, I lose money. Same thing in the futures market. It's no different. In the stock market, guys, you have a choice. It's unlike any other industry. You can bet on things going up, or you can bet on things going down. Where you make your money is the difference from where you get in to where you're going. If you decide at the highs of the day you're going to bet on the market going down, you only make money if the market goes down. If it goes up, you lose money. So yeah, what's the most you can lose in a day, guys? I'm not going to say that's the most, because that's not the maximum. You can lose more than that. But if the S&P 500 on average moves $100 a day, that means you can win 500 and you can lose 500. So you got to be careful. You got to make sure it's going in your direction. You got to make sure it's going in your direction. That's why if you decide that you want to do this, guys, you got to make sure that you understand risk to reward. Now, I'm going to risk $50 to make $100. I'm going to risk $50 to make $100. If it goes against me and I see that I'm down $50, guys, I have to sell. I have to sell it, and I have to lose $50. And yes, your account is gonna be down $50. But when I win, I'm gonna make $100 or more. When I win, I'm gonna make $100 or more. So let's see, using my method, I'm gonna use a 3-minute chart, guys, because there's been a lot of volatility. We just learned about Heikin-Ashi candles, so I'm going to show you guys how I trade. I'm about to show you guys a trading strategy for free. Let's say you woke up this morning at 8:15, because people don't believe they can make money before the market. Right now, what color are these candles that you see? And are there wicks above? If trading the way that I trade, guys, we want to look for wicks that are on the top of the candles, and all we need is two. That's all you need, 2. If I was up this morning at 8:30, I could have bought in around 8:06. I could have bought the MESs long at 67.52. What does this have to go to in order for me to make my money, guys? In order for me to make $100 for the day, what does this have to go to? It's at 6,752. What number does it have to go to? What price does it have to go to in order for me to make $100? Because remember, every dollar move, I'm gonna make $5. Johnny got it. Oh, no. Arwen got it right. Arwen got it right. The answer is 67.72. So I know a lot of you guys are like, but Joel, that's only 20. That's only 20, Joel. The math ain't mathing. That's 20 points. But remember, every point I make $5. So even though it moved 20 times 5, that's my $100 for the day. If you were trading the way that I trade, It reached 67.72,
Yeah, I went out there.
guys.
Okay, perfect. I love it. Thank you.
And he was just talking about
8:30.
futures again and how he did it. So I recorded your
Wouldn't you love
phone
to
so
just
that you
get
could
up
just
at
see
8?
it for quickly when you're going into the toilet.
Be out of the market by 8:30?
I think
And
I
you
found
just
a
made
flight
your
from
$100 for the day?
JFK
Wouldn't you
to
love that?
Paris for $1,000 a person.
In fact, you would have been in
Premium
at
place.
you would have been in
Can't get
at
business,
somewhere
huh?
around 8:09.
Well, I don't know if it's that much difference between business and premium.
You would have bought in at 8:09. You would have bought in at 8:09. You would have been out by 8:30. Now, for those
All right.
that are confused,
And then we just
how
have to
much
figure out
money
what
did
are
I
the
need
requirements.
to make this $100 for the day? How much did I need, guys? How much money did I need in my account to make this $100? Because you gotta have money to make money. What did I need to make $100 a day? I'm sorry, not a day, but $100 on this trade.
So you getting it or
You needed 24.64. So you made about, I don't know, what's the percentage on that, guys? $240 would have been a 10% return. You made about a 4% return. A 4% return. I don't know if that's the exact number. You made about a 3.5%, 4% return. And what? 8:33 in 23 minutes. For you guys that don't know this, you can get in and out the market as many times as you want to in the futures market. You don't have to have a cash account. You don't have to have $30,000, $25,000 in your account to be able to get in and out. You can just get in and out as many times as you want.
that way we could probably go.
You're like, hold up, Joel. So you mean to tell me I can take this trade over and over again and try to get 20 here and 20 there? And did I even have to get out right there? I'm like, nah.
I drank all
could've
my
just
wine
let
up
that
except for
bad
that little
boy
bottle.
go.
Yeah, give me some wine. Shit.
In fact,
What's up with you?
we're sitting at 67. Oh, well, we're sitting at 67.65. So, but let's see what it did. That was at 8:30. Let's say you decided to take this trade to the downside. Remember how we bought to the upside? What if you don't believe in the market and you're like, man, I don't believe in this move going up? When we broke the trend, guys, do y'all see how easy it is for me to trade? It's so easy for me to trade, guys. It's like taking candy from a baby. It really is. I'm not flipping back and forth like you guys are doing. I don't have 57 indicators on my charts. I'm literally going green, red, and all I learned how to do is draw this white line. You could have taken a short right here around 6,800, 6,802. And the lows were about 67.80. How much money did I make on this move? How much money did I make on this move right here? It went from 68.02 to 67.80. I need you guys to do the math. Do all the math for me and then I'll pin it. How much money did I make? I need the points times how many I make a point for how much I made. And that's just assuming you caught the whole move. This is the MES that you guys are looking at. So it dropped 22 points times 5. There you have it. You would have made another $100. Hold up, Joe. I could have made $100 from 8 to 8:30. I could have made another $100 from 10 o'clock to 10:20. I'm like, yeah, it ain't done. That was 100 over there, 100 over here. Now, I know a lot of you guys are like, well, Joel is green right there. You would have taken a loss. Ha 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 ha. And I would have said, no, I wouldn't have. Do y'all see any wicks that are only on one side? None. I see zero. I see 0 wicks. Well, that made it worse. But none of these green wicks have wicks only on one side except this one right here. That means none of these are trades. That means the next trade wasn't until here. I'm teaching you guys a $1 million strategy for free. I ain't even charging y'all for this. I'm showing y'all one of the easiest ways to trade. There is no easier strategy than this. I can admit that. There is no easier strategy than the one that I've created. Now, I'm going to be honest with you guys. I like it to pop back up to this 10-day moving average. If you've taken my futures video, I have taught you guys S patterns. And I always say when it comes down, you put a trend line on it. When it pops up about halfway, you get into the downside. So to be honest, you would have probably taken this trade somewhere around this area here. But we're not here to learn all the ins and outs of the trade. Y'all can just see with your own eyes. If you decided to short this again, guys, we were at 67.90. And guys, today wasn't even a big volatile day.
You said he ain't had no legs?
Volatile. This is just a normal trading day. Let's say you were able to catch some of this move. Let's say it went down to 67.70. 67.70, guys, was right here. If it dropped from 67.90 to 67.70, how much money did you make? Now, mind you, guys, I didn't even trade this today. Guys, I'm not showing you guys something I traded. I didn't even trade the ES today. I traded the NASDAQ. I wasn't even trading the S&P. So don't think I just looked and saw how much it made and said, ooh, I'm just going to show them something today. I ain't even trade this. I literally, y'all asked to look at the MES. I pulled it up. And I'm showing you guys. How much is that? It dropped from 67.90 to 67.70. Arwin has it again. Is Arwin the only one that knows how to do math today? 67.90 to 67. Hey, Zane. 67.90 to 67.70 is 20 points. 20 points times 5 is 100. That's another $100 made. That's $300. Guys, it's only 12 o'clock. You made money at 8 o'clock. You made money at 10 o'clock. You made money at 11 o'clock. You could have made any amount that you could. Hey, and Zanga, can you come and grab Greg?
Busted all the way in.
So that's $100 there.
You didn't let him do a cameo?
Yeah, you can. So we got another young trader that just came in. He was busting in the room. Say hey, Greg.
Hey.
So we got young traders trying to trade. No, this is not mine. This is my nephew. All right.
Kitty, see you later, son.
See you later.
Been so disruptive.
I know, y'all loud. My loud family. So that's $300. 300 that you guys just made, right? Now, That was 12 o'clock. Anybody confused in the comment section? If you're confused, what are you confused about? Be honest, because this is the only time, it's not the only time, we're going to try to answer your questions. Because there's a lot of people that understand futures in the comment section. All right? If you're confused on what we're doing, if you're like, Joel, I don't understand none of this, I want you to think about it like you would a regular stock. Okay? Trust Montana, all you need to understand is that, look, when you're trading futures, you have to have a certain amount of money in your account. The only difference from futures and stocks is that every futures contract, the moves are going to be universal no matter what platform you go to. So I can trade futures contracts on Thinkorswim. I can trade it on TradeStation. I can trade it on TradeView.
I thought we
can
were
trade
drinking
it on
partners.
Webull, Robinhood, and every dollar move I'm gonna make $5. However, the margin requirement is gonna be different depending on what platform you go to. Thinkorswim requires you to have $24.58 or $2,500 to trade one contract. You can buy as many contracts as you can afford. Every $2,500, you can double up what you're doing. Those $100 moves, I can make $200. So a lot of people will come in here with $5,000 and $10,000 accounts. They'll buy 4 contracts, and on those same moves that you guys just saw, there are people with $10,000 accounts that are making $400 per move. So that move, those 3 moves you just saw was $1,200. Now, $1,200 might not seem like a lot to you, but if you make $1,000 5 days a week, guys, that's like 20 grand a month. That's like $250,000 a year with a $10,000 account. That's why the majority, I ain't even gonna say most, the majority of day traders, real day traders, not, because everybody think they a day trader. I'm talking about professional day traders. The majority of professional day traders, is no way they don't know how to do futures. At some point in their career, they did futures. And if you see them doing options and all of these other derivatives of the market, more than likely they're trying to hit a home run. You don't really see too many professional traders day trading options. I only really see novice traders day trading options. Okay? You hardly ever see, like, if you go on TikTok and you start seeing all the cats that's got like 1,000, 1,500 views when they're live, you're never gonna see them trading options. Because professional traders don't do that. Professional traders will trade the futures market and the stock market, and then they will use the options market to hit home runs or leverage their accounts. Or the professional traders, don't get me wrong, the professional traders will swing trade by selling covered calls. I don't want to, I'm just letting you know what they're doing. They're selling covered calls, they're buying options. So the conservative way of trading options is going to be selling covered calls. There's so many different ways you can trade options. I'm not here to bash options traders, guys. I'm an options trader. I'm just telling you guys percentage-wise what everyone is doing. The futures market is used for control, getting in and out. It's hitting singles. It's being able to earn a little bit of income while you're looking at the market. And it doesn't necessarily have to be scalping. Yes, today was a scalp because volatility is high. When volatility is high, you can't help but scalp. You gotta scalp or you're not gonna make any money. You could be up $400, $500, $600 and it gets taken away in the next hour. When the volatility comes back down, you're not gonna see those volatile moves in the market, those whipsaws in the market. But even the professionals are having a hard time handling the whipsaws unless you simplify what you're doing, that can handle it. So I told you guys, once the volatility started to go up, I even personally, guys, I was using the 5-minute chart for the last year. When volatility kicks in, I can't use that 5-minute chart because within that 5 minutes, the whole move could have happened. So I'm not gonna go down to a 1 minute, even though I can. I'm gonna cut in half the chart that I'm using. So instead of using a 5-minute chart, I'm gonna use a 3-minute chart. I have a friend of mine that trades using Heikin Ashi and actually my friend that introduced me to Heikin Ashi and the FW Mobile, I think he uses the 2-minute chart. So he uses the 2-minute chart. I use the 3-minute chart, but I normally use the 5-minute. So it just depends on, what you're doing and how you're doing it. But in my opinion, a lot of the reason why a lot of you guys are having issues intraday trading is, one, you haven't simplified it down enough, and B, you haven't adjusted to the market. You gotta adjust to the market when the market changes. Volatility goes up, you gotta adjust the chart you're looking at. Volatility goes volatility goes down. Guys, sometimes I might have to look at a 15-minute chart because the market's moving so slow like molasses. I gotta up the chart just to see what's happening. Like during the summertime, it is so boring. Y'all might see me day trading with I'll never go as high as a 15-minute, but I might go up to maybe a 10-minute chart, right? I might look at the 15-minute just to see what's happening. Still trading with the 5-minute, all right? So I just wanted to make sure that you guys understood. More volatility, the moves happen way faster. You swing traders, there's no way you guys can make money holding things overnight. Because the market moves so much, if you got a Friday expiration, it's so choppy jalopy. The puts ain't making money, the calls ain't making money. The unusual options activity is hitting, but it's hitting during intraday. And then it's reversing so fast to the opposite end. You're like, man, the theta and all of that crap gets all messed up. So just be careful when you guys are out there intraday trading. I've always said this. Intraday trading is going to give you more control than a 5, 10, or 15-day trade. Now, you can also handle the volatility of the market, guys. If you trade outside the hours of the market. The futures market allows you to do that. The futures market is open 23 hours a day, 6 days a week. 23 hours a day, 6 days a week. In fact, is it open now, guys? I always forget. I think it closes at 5 and reopens at 6. Let me see if it's open. Let me see if it's open right now. Yep, you guys see it moving right now? And what's crazy is that, how long we been on? Man, I could have taken a trade. Look, I could have taken a trade at 6 o'clock, guys, and look at how much I would have made. Oh my God, I am mad. So that's 4. This is 6 o'clock. So guys, we could have taken a trade right here while we were on. I'm gonna show you guys how much we could have made if I decided to take a trade when we first came on today. What color do you guys see? What color? What color do you guys see right now on my screen? I'm gonna show you guys what we could have done. I'm gonna start doing it too. I'm gonna start taking trades live to show you guys how easy this is. It's red. What are we looking for? What are we looking for? Before I even tell you guys what candle to look for, what are we looking for? What are we even looking for? We're looking for 2 wicks, but what are those 2 wicks doing? Wicks Wicks on one side. There you go. Which side are we looking for it on? If we see red candles, what side does the wicks have to be on? Yep, I like that one. I like that answer. Two wickless. Wait. What did you say? Okay, wicks on one side, two wicks. Two wicks, wicks on one side. Yes, downside. All right, you want to see wicks on the downside if we want to bet on it going down in price. Now, at 6 o'clock, guys, these three candles don't count because the market was closed up until this candle here. So the candles on the left side don't count. So we have to start counting from anything to the right of that white line. So if you notice, we're going to have a wickless candle right here. That's one. And here's number two. That means Joel can take a trade if he wanted to. Now, I want it to come up halfway up the middle of this candle. So if this candle, what I mean by halfway is means I can enter on the third candle. When I betting on things going down. We're betting on things going down. Why? Because we see red. Red is down, green is up. Red is down, green is up. The whole chart is telling you what to do. You got red volume candles. You got red on the TTM squeeze. It ain't nothing but red. Anybody that tries to go green right now, you probably a Taurus or an Aries. Just stubborn. I'm gonna do what I want to do. Look, I got an Aries. My brother's an Aries, and one of my best friends is Aries, so I have the right to talk about you guys. You're a Taurus. Bruce Leroy would be like, I'm going long. TJ be like, I don't see red. I see a rejection. Nah, I'm just playing with you guys, but you don't want to be stubborn. You want to go with the market. Okay? So we're looking at the MESs. In the comment section, again, I keep forgetting, how much do I need in my account? How much money do I need in my account to trade the MESs? How much do I need, guys? In order for me to take this trade, I need a certain amount of money. And this is for Thinkorswim. So here's the confusion. On Thinkorswim, you need 2,500. On Ninja Trader, you only need 500. I don't know how much you need on Webull. Anybody trade on Webull? Y'all know what the margin requirements are for one contract? I don't want you guys running to the platform that gives you the cheapest margin. I want you guys to feel comfortable with whatever amount of funds you have. Because in my opinion, the less the margin is, the more likely you are to blow up your account. I wish it was $10,000 per contract. To be honest, that will really, really protect a lot of you guys. So, let's say I decided to get in around 67.71. While we were on this live, the MESs dropped from 67.71 all the way down to the lowest point was 67.64. Now remember how I told you guys, even though that looks like a huge move, it's after hours. A lot of people love trading after hours because they don't have to worry about all of that volatility in the regular market. Okay? But how much could I have been up if I decided, man, I ain't going live. Ain't nobody gonna throw me no gifs. I'm just gonna trade from 6 to 8. How much money could I have made if I captured this whole move from 67? If I captured this whole move from 67, from 67.71 to 67.64, and I make $5. Remember, I make $5 per dollar move. $35. 71 minus 64 is, wait, 6 is 64 is, wait, 6 is 7. 67.71. All you're going to do is the math. You're going to take 67.71 and you're going to subtract it from 67.64. That's going to equal 7. 67.71 minus 67.64 is going to give you 7. I make $5. I make $5 per move. So I'm going to take 7 times 5. I could have been up $35 real quick. While you guys are watching this live, you could be making money and watching me at the same time. At the same damn time. Wouldn't that be great? Right? Betting on the market going down. Once you're out of this trade, guys, and now you have to sell to get out. So even if you're betting on the market going down, you have to get out of it. And then once you're out, people ask, can I use that 35? Yes. Futures, like if you buy a stock, it takes 3 days, guys, in order for you to have access to your money. What's the word I'm looking for, guys? It has to, somebody find the word for me. Y'all know my me settle. There you go. Thank you. It has to settle. So when you buy a stock and you sell a stock, it takes 3 days for it to settle. Then you have access to those funds. Futures settle immediately. So you literally can buy this. You literally can be like, yo, I need $35 tonight to go out to eat. You literally can be at the table and be like, yo, I need $35 real quick. You can trade, make that $35 and then transfer those funds out. All right, it settles. Oh, okay. So, all right. So I don't want to say the wrong thing. Some accounts settle at different points. All right. Futures is the fastest to settle. Sometimes it might be that day. Sometimes it might be the next day. It depends on the broker. Every broker is going to treat their settlement period totally different. All right. If you have a cash account, you also can have it settle pretty quickly. All right. So it just depends on what you're looking for. You know, y'all need to help me because when it comes to stuff like that, I might be a little wrong. So please do your due diligence, right? This is a do-it-yourself room, not a believe everything Joel says. All right, I'm about 95% correct when I'm talking about things. 5% might be fake news. It's not intentional fake news. It's a difference. It's not malicious. It's just that I'm human. All right. Okay, Mr. Bell, yours funds max day. Okay, you have cash. Okay, it sells the next day. All right, cool. Now, a lot of you guys can use the same strategy using the TTM trend. Did you guys see how it's the same trade? It's just that they're different things. It's different strokes for different folks. Some people see things a lot different. My wife, she hates, well, I wouldn't say she hates Heikin-Ashi candles. She likes to see the opening and closing price of the stock. So if you're trading the what would Joel do method and you're using the TTM trend, instead of 2 candles, guys, you're going to wait for 3. and you're going to wait for 3 candles that are at least sideways. So you see how these 3 red candles right here are giving you a sideways to down move? These 3 will count for a short. Okay, you would get in on the 4th candle. Whereas on the Heikin-Ashi, the reason why I love them and the reason why my buddy likes them is because we can get in about a candle earlier than what you guys see. Okay? So if you use your regular TTM trend, you're going to be about 1 candle late. Sometimes that 1 candle helps you out. If you're using Heikin-Ashi, you can get in about a candle earlier. Now, I go back and forth. I'll have the Heikin-Ashi on. I'll flip back to this once I see the 2 candles go off. You guys know why? Because if you're using the What Would Joel Do method, I need that. Like if I'm looking for a short or if I'm looking for a long and I see 3 candles, I'm looking for it to pull back to the 10-day moving average. I can't see it pull back to the 10-day moving average when I have the Heikin-Ashi on. All right, so I go back and forth from Heikin-Ashi to regular candle. But I have the Heikin-Ashi on to see my entry early, and then I flip to the candle, and then I wait for this pull back to the upside. I try to buy it at least the top of that candle or the 10-day so I can get this whole move to the downside. Y'all know I'm going to always try to get some equity in any of my trades. Like I'm always looking for equity. So even if I see it go green, it better pull back some or Joel ain't getting in. And I've missed a lot of trades when it just completely falls. But these days with the volatility, there's no way you can't find a way to get back in because it's gonna whipsaw right back up to where you need it to go to. Because that's just what the market's doing. You see how it's gonna whip back to the 10-day anyway? This is the perfect time to use the 10-day moving average. Now, for you guys that use the 513, what I've done was I've taken the 5 and the 13 off and I've created a 10. The 5 and the 13 is now the 10. The 5 and the 13 is now a 10. The 5 and the 13 is now a 10. The 513 was used to help you guys understand crossovers. But if you're looking at if you're using a trend line, you don't need the 513. If you're using the FW Mobo or if you're using the TTM trend, you don't need it. Okay. All right, let's get back to, so let's look at some of you guys' stocks. All right, 713. All right, so Delta. Delta guys should have been down. Why? What's the theory behind oil stocks? The theory behind oil, guys, is that when oil goes up, that means companies like Delta are going to spend way more money on oil. So their company's going to lose money because of the amount of money they have to use to buy oil. Now, what direction is the yellow brick road angled? What direction is the yellow brick road angled? What direction is this yellow brick road angled, guys? Also, can someone tell me the beta and I need the beta and I need the market cap of Delta. We need to know how big Delta is, and we need to know the market cap, and we need to know the beta. But if you notice, the yellow brick road is angled up. Isn't it interesting how no matter what chart we look at, guys, the millionaires and the billionaires know to buy it when it hits the yellow brick road? Isn't this interesting? And a lot of you guys are just finding it out now. All right. When the yellow brick road is angled down, guys, look at what happens. Do y'all know that the yellow brick road on Delta went down from 2021 all the way until May of 2024? I'm going to show you guys something. The yellow brick road started to go down, guys. I'm going to show you the date. The yellow brick road started to go down April of 2020. This is why y'all will never hear me talking about airline stocks. Because as long as this 200 days ain't go down, guess who ain't gonna be around? This guy. This guy. What I need? I got all the information I need. I don't have to go listen to no podcast. I don't have to go take a $10,000 class. This is the polygraph. The average price of Delta started to go down. And this is a 4-year average. That means the average price is going down? Calculated over a 4-year period? There's no way you're going to get me to buy this. Nah. I'll holler at Delta once they 200-week moving average starts to angle up. So you could have stayed away from Delta, guys, until February of 2025. That's when it started to go up. I'm sorry, February of 2024. You could have spent 4 years somewhere else making a whole bunch of money, but you had no idea that moving averages tells you everything about the company. The PE ratio, like all of that stuff that everybody learns to figure out if a stock is even profitable or if it's interesting for us to buy. We don't have to go and read all of that crap anymore. It's great if you want to know how much they're making and what's their PE ratio and what's the beta but why? If Wall Street ain't buying it, I ain't buying it. If the billionaires ain't buying it, I ain't buying it. But when it started to go up, look at this. The billionaires knew when to get in. Y'all see how easy it is to learn how to invest in the market when you know what to look for? You could have stayed away for 4 years and then finally decided, all right, I'm gonna get in 4 years later. I could have caught Delta at $40. I could have caught Delta at $40. I could have rolled it up to 70. I could have rolled it up to 76. I could have caught me a quick 50% return. It didn't quite double. But do y'all know how many companies doubled in the last 5 or 6 years? NVIDIA grew 1,000%. But a lot of you guys you went off of, I've been riding Delta forever. Delta's the #1 airline that's out there. They make the most money, so it's something that I know. I travel on it. I do my business on it. I have all of my points on it. I go to the Delta Sky Club. So I'm going to buy Delta. And you didn't make any money for 4 years. And here's what's crazy. My dad worked for Delta. So don't tell me it's about, emotion and I don't know what I'm talking about. If anybody should have bought Delta, it should have been my family. And my family was like, nope, Joel. You know when to buy these things, you know when to get out. And now Delta is in it went up today, but that's what happens. It'll give you a nice little 5-6% move. Now, I'm not talking to you super traders out there. There's a bunch of super traders out there that can catch every move to the upside. I'm not talking to you guys. I'm talking to investors and swing traders that's been struggling in this company and not knowing why. We don't need to know why. All we need to know is that on the investing side, Wall Street wasn't interested in it. They're interested in it now because the polygraph has told us that the 200-week moving average is now going up. That means the average price over 4 years is slowly going up. It's time to buy Delta again. And the areas that we're going to buy it is the yellow brick road is the sweet spot to buy it. Like, you're only going to be able to catch this area one time a year. Maybe we're about to get another chance. Or you can pull up the 200-day moving average. What direction is this 200-day moving average angled, guys? Is it angled up or down? What direction is this angled? What direction is True Blue angled? It's angled up. So you could catch it at the 200-day moving average. And guess what, everybody? Guess what the billionaires and millionaires did? They bought it here because they knew where to get in. When you're trying to catch a falling knife, that means when you look up a stock and you decide you want to buy it and you think it's on sale, I'm not gonna bite your head off if you say, Joel, I think it might stop at this 200-day moving average. In fact, I might buy it with you. But when you guys were telling me to buy it way up here when it was red, I was like, what are you guys talking about? This looks bearish. This looks bearish. Not only is it bearish, we got 3 red candles. If I put the Heikai Anishin on this bad boy, I bet you the Heikai Anishin candles were wicks to the downside. Y'all know y'all can use this for swing trading also? What do you guys see? Wax on, wax off. Look, I'm teaching you guys something, you ain't even know it. Why Joe talking about Heikai Anishin today? I'm a swing trader. I don't need that. Yes, you do. I hope you remember what we talked about. You got to the downside. You got 2 wicks to the upside. Ain't one nobody thinking about buying. Nobody thinking about buying Delta from February until now. Now everybody's like, ooh, maybe I'm going to take a shot. Joel likes to see you break this trend. How many candles do I need on this opposite side? Not the Heikai Anishin. How many candles do I need on the opposite side if you're using the What Would Joel Do method? Using the What Would Joel Do method, how many candles do I need on the right side? 3. And it can't be 3 going down, guys. It's got to be going sideways or up. Now, what I don't like, I'm going to tell you what I don't like. I don't like this gap. Ugh, that's nasty. I hate gaps. Ugh, it's an 80% chance that gap is going to fill. I don't know if I would buy. I don't like gaps, guys. Gaps have kept me out of so many stocks. I've seen some gapping goals and it's never come back to the gaps. Me personally, I need that gap to fill. I need that 7% move that we got today. I'm going to need it to go right back to the price that it was before. And then start over again. I need 3 more candles again. So I wouldn't personally be ready to buy this. Now, would I have day traded this today? I sure would have. Could you have made a Millionaire Challenge trade on Delta today? Well, let's see. What are the rules of the Millionaire Challenge trade? What are the rules of the Millionaire Challenge trade? What are the rules, guys? What are the rules of the Millionaire Challenge trade created by yours truly? Dang, I cannot type. What are the rules? Does anyone know the rules? It's only 3 rules. One of the easiest trades to take to try to maximize how much we ain't going for singles, guys. We going for the gusto. We going for home runs. It has to be in the news. This is the most important piece right here. Guys, they gotta be talking about it on TV. It's gotta be something like Uber was in the news today. NVIDIA has just partnered with Uber. Millionaire Challenge trade candidate. Delta News. Arwen is on it. Y'all better buddy up with Arwen. Unusual options, volume, news. Volume, news. Now, I don't know if you could have made any money, but we gonna see. We gonna see. Now, we are playing, we are, this is hindsight 2020. I already see what it did. All right. I didn't take this trade. But let's just go through the process, right? More than likely, when you pulled up Delta this morning, and I proved this to all of you guys, a lot of the times at 9:33, you gonna know which option to buy. Now, what's today's date? Today is what these one day options are killing me, guys, because I'm not used to seeing a 1 day option. And all right, so I'm gonna pick the March 20 option. I'm gonna take a picture. And when I take a picture, I want you guys to tell me. Now, here's what's crazy. I see it's about equal. To be honest, there is unusual options activity, guys, but it's kind of balanced. I see the same amount of volume on the put side that I see on the call side, but it still doesn't mean that you can't take this trade. Let's just see what happens. I want to see if you could have made 100% return. Now, we're not going to look at open interest. People ask all the time, Joel, what's the difference between open interest and volume? Volume is contracts that are actually being bought. Open interest just means that they're available. So let's say you had a whole bunch of shares of Delta, like you own, I don't know, as many shares that I have. Well, that's open interest. You're putting it out there for somebody to take, for somebody to buy, and you're letting everyone know these are available. It doesn't necessarily mean somebody gonna buy them. It just means they're available. So open interest just means that there's somebody, some entity, a lot of organizations willing to rent those shares out. Volume is actual contracts being bought. So I don't look at open interest. I look at volume. Don't get it twisted. Now, here's my chinny chin chin. We're going to go down my chin. I want you guys to tell me the biggest number that you guys see. The largest number. What's the largest number that you see? $64.48. Thank you, Raymond. All right. 64.48 is the largest number that you see. That's the strike that I probably want to buy. Now, there is one on there that's 56 also. I don't know how they look that morning. Now, if I pull up Delta and that strike is not higher than where we are right now, I'm not taking the trade. The strike has to be higher than where we are when we open. Like when the market opens, when Delta opens, if Delta opens at $60 and all the volume is at the $60 strike, I'm not taking that trade. It has to be higher if I'm gonna buy a call. It has to be lower if I'm gonna buy a put. So that 64.48 was at the 62 strike. All right, so the 62 strike had some activity, and the 62 strike and the 65 strike. Now, the 65 strike might have started hitting after the market opened. I don't know. I wasn't there. Just being honest, I wasn't there to trade Delta today. Okay. So if we look at Delta We already know that the 62 strike is what we kind of, the 62 strike had all the volume. Let's just say, guys, the 65 strike, we also saw volume. If we're sitting at 63, so I'm gonna show you guys something. When Delta opened that morning, we opened at 63. This is where you guys go wrong with the trade. You just bought a $60 strike that had all the volume, and we higher than 63. That don't make no sense. It has to be higher than where we are. That's why that 65 strike started cooking. Now I'm gonna be honest, the way that it looks, that 65 strike probably didn't start cooking until about 12 o'clock. Because what will happen is maybe some news came in, and then all of a sudden people start buying that 65 strike. But let's just assume at 9:30, guys, the 65 strike was also, there was a lot of volume. So sometimes if I see two, even though the 60 had the most volume, if I see the 60 and the 65 and they both are unusual, I'll still go after the 65. So, what do I do when I see that 65 strike? Well, I'm not buying that strike until I start seeing people buy it. So, this is another thing that you guys get wrong all the time. And I'm like, guys, don't just buy it at 9:30 or 9:33 because you guys, just because you see it. So at 9, I think I would have lost on this one. But let's just see. Let's just play it out. Let's say you started to see it green, right? And then all of a sudden you decide that you want to buy it. Let's say you were able to see the sell-off. Once it starts to sell off, and it doesn't have enough volume for me, but that's fine. Let's say it started to sell off. I'm not getting in until I start seeing some solid green candles. Not these little specks, guys. These little freckles. I'm not getting in on these freckle greens because these are dojis. It needs to look like this. You see this 1030 candle that's green? Right here, smack dab in the middle? It has to look something like that. But I needed to break the trend and start going up. So I would have probably bought somewhere around here. And what am I looking for? I'm looking for 100% or more. At that particular time, guys, Delta was sitting at $70. So if you had $70, you could have bought that option. That was around 12 o'clock. No way Joel would have been in this trade because Joel's on the golf course by 12. Well, actually by like 1. Joel's getting ready for the golf course. No way Joel would have been in this trade. But then if you were able to ride it out, it went from $70 all the way to 136. It didn't quite give you 100%, but it sure did get close. So does it count? Yeah, kind of. Oh, actually it got higher than that. My bad. It did get there. It got to 150 before it started to come down. So you were able to double your money. I know you guys are like, dang, how did it go to it? How did it double like almost exactly before it started to turn around? Because I've been doing this for years. I know what these things are going to do. That 100% is what everyone's looking for. Okay? And then it started to go down after that. You have to get out that day. Where do you guys go wrong? Greed. I just made 100% today. Man, I'm just going to hold this overnight. You forgot about theta. Theta's going to bite you in the butt when you wake up in the morning. Just the fact that if we even at the same price the next morning, it's going to go down in value. Okay? You have to get in, you have to get out that day, that trading period. You are there to rob the market. You're there to rob it, get in your getaway car, and be gone. Audi 5000. Audi 5000. Stop trying to hold it overnight. In fact, guys, stop trying to hold it even past 12. If you're taking this trade 9:30, 10 o'clock, y'all should be out by like 11 or 12. Now, you can take this trade for the 2 to 4 session too. You need to be out by 4 o'clock. All right. Where you guys go wrong is you don't pull up the chart and wait until that chart starts to go green. That's the whole reason why I created the whole strategy. Because there is no TikToker, there is no human that I've met yet that put the TTM trend on the option strike. I ain't seen nobody do that. That's all yours truly. All yours truly. All yours truly. Your bonding indicators on the options chart. I wonder what would happen. Voila, the Millionaire Challenge trade was created. It was created. All right, there is no single solitary person doing this unless they learned it from me. All right, there's no one that's doing that unless they learned it from me. Okay, some people may have put a Heikeneiche candle on it. I ain't seen nobody do it. And you know, in these streets, you gotta claim what's yours. The little bit that we gotta claim what's ours, right? That's my claim, right? Introducing you guys to the John Carter studies. I'm claiming that. All right, and you guys can thank my sons for it. If my sons, actually, I would have seen the indicators anyway. But it was my oldest son that was like, "Daddy, can we go see John Carter, the Disney movie?" And at the same time, I was literally looking at the John Carter study. I'm looking at my computer like, I thought he like came behind me and like read like over my shoulder. Cause I was like, how am I looking at the John Carter studies? And he just walked in the room and asked if I could take him to go see the movie. I was like, God, is this an omen? Like, is this a blessing? Like what's going on? What's going on in the Matrix? That is the day that I was introduced to the John Carter studies. I don't know what year that was. Go back and look and see what year the John Carter Disney movie came out. That's when I started using it. And from there, I introduced it to every single person I could come in contact with. All right. All right, so let's look at some stocks. All right, that was Delta. So let's look at Uber. What time is it? 7:38. Let's look at Uber. Uber, I don't remember exactly what they did, so I'm going to pull it up on ChatGPT. I'm going to ask Uber, why was Uber up huge today? So I'm going to go to chat, and we're going to ask it. It was up big because... It was up big today because... Uh-oh. Dang, what the heck did I just do? I don't know what I just did. Okay. Let me see if you guys can see this. All right, cool. Why is, what relationship does Uber have with NVIDIA to cause it to spike today? Let's see. Hopefully you guys can see this. It says, big picture, why NVIDIA spiked. Not why NVIDIA, why Uber spiked. Oh, plus NVIDIA equals robotaxi plus AI supercycle. What's the relationship? Uber is using NVIDIA as the brain for its self-driving cars. All right. NVIDIA provides the AI chips plus the software, the autonomous driving systems. Uber is going to provide the global ride network, which is millions of users, and the deployment of robotaxis. Together, they are building a massive self-driving fleet. Why the stock move today? Well, AI expansion beyond data centers. NVIDIA is no longer just AI chips for ChatGPT. Now it's self-driving cars, robotaxis, real-world AI, physical AI. That's a new $1 trillion lane. There's going to be over 100,000 robotaxis coming in the next year to next year, this year and next year. Uber plus NVIDIA plan to have over 100,000 autonomous vehicles. This isn't even including Tesla. Tesla has a relationship with Uber, guys, where you're going to be able to use their robo-taxis on their app as well. It's about to be huge. And that is a massive demand for NVIDIA chips. All right? This isn't just Uber. It says Mercedes-Benz is going to be part of this. Stellantis, Lucid, all using the NVIDIA AI with Uber's network. NVIDIA becomes the standard for autonomous driving. Simple way to think about it. NVIDIA is the engine. Uber's the distribution. Markets love this. All right, so that's why Uber popped today. So if you look at Uber's chart, if you're thinking about buying Uber, guys, what's crazy, guys, is I just sold Uber last week. Sometimes you get unlucky. I just sold all of my Uber last week. All of it. Why? Because Uber was falling in price. Uber was down 30%. Y'all remember what I said about my stocks? I don't play around with stocks that are in the red. Uber was down 30% in my portfolio. It had to go. And I missed the 5% move today. Doesn't mean that I still can't get in it. This is why I be laughing at you guys. Who cares about a 5% move? Uber was 102. Oh, let me show you guys. I know you can't see my screen. Let me flip the screen. Uber was $102 a share. Did somebody give me? Yeah, there it is. Raymond got it. Uber is $161 billion in size with a 1.22 beta. That means Uber moves, guys. Even though Uber might be boring to you, Uber moves. Uber, from the April lows, you could have caught Uber at $61. It rose to $100. So during the April tariff lows, Uber was sitting at 61 bucks. It rose all the way to $102. For those that don't know the ticker symbol is UBER. That's the ticker symbol. The ticker symbol is Uber. Uber is still in a downtrend. I'm still not sold on this yet. And this is very important. Just because we got all of this news does not mean that Wall Street and the billionaires are interested in buying it. This is just the sales pitch. The sales pitch is what's happening now. A sales pitch does not always mean that there's going to be a sale. I'm not sold on this move yet because we have not broken this trend. I haven't seen buying for about a week or two. Sometimes it might just go up to the trend line. Sometimes they use the news to sell any shares that they have. So if you want to buy it here as an investment, you're getting it 30% off. I love buying stocks 30% off. So as an investor, I would say buy it if you haven't bought it yet. You got some equity in it. You got over 20% equity. You can't be mad at somebody that buys something that's got 20% equity in it when you have good news like this and the yellow brick road is angled up. That means you got a healthy company that has a healthy partnership on an industry that hasn't even grown yet. That's what you look for as an investor. Now, as a trader, I might think differently. As a trader, I'm going to look up maybe the 200-day moving average. As a trader, I'm not sold yet. What direction is this moving average angle, guys? What do you guys see? What direction is the 200-day moving average angle? Trader. Down. It's angled down. So as a trader, remember, bulls make money, bears make money. Bears make money on Uber every day and bulls make money on Uber every day. It just depends on what your time frame is. So I don't want to argue if you can make money as a bull or bear. I'm just saying statistically, if I'm swing trading this, you can make moves to the upside, but the bigger moves are going to be to the downside short term. Long term, the 200-week moving average is saying you buy. It's in a upwards trend and it's on sale. You might have some short-term bearishness. As a swing trader, I'm not trading this, especially if I got the 200-week angled up, the 200-day moving down. You got information that just came in. You're bumping up against a trend line. You got a gap in your chart. There's no way y'all gonna get me to trade this 2, 3, 4 days from now. There's no way, because you don't know. You got a 50-50 chance of making money. It's luck if it goes your way. It's luck. So I would say as an investor, those are the only people that should really be thinking about buying this. If you're an investor, if you decide that you're going to buy here, don't put all your funds in Uber. You know, I would buy a quarter or a half position expecting it to go lower. If you can't stomach another 20% move to the downside, because it can go from 79 to 69, which I guess wouldn't be 20%. It would be about another 12%. If you can stomach another 12% drop, buy Uber. If you want to buy it right here, right now, because you're like, Joel, I'm only buying one share, so 77 and 69 is really not that big of a difference in my portfolio. I'll take that $8 move to the downside, then buy it here. But if you're putting 77,000 in it, and you're like, it might drop another $8,000, you might be thinking twice, like, yo, I don't know about that. That $8,000 is a lot. So it might, it depends on your position size of what you want to do. All right. So be careful, all right? I don't know, Jay Jones. I think Trump might not like NVIDIA, but he has to work with NVIDIA. Trump wants to win. NVIDIA is the largest company. Trump likes working with winners. That's just his thing. He likes working with the best. If you're going to work with the best, he might not like NVIDIA, but he knows that that's the only way he's going to have any type of leverage over China is with NVIDIA. The only way we're going to have any leverage over any company is going to be to take over the semiconductor space. And because they're involved in everything, he might not like them, but he's not like them, but he's going to work with them. If he doesn't feel like he needs a company, or, then he might move to the next side, right? He doesn't like Tesla, but he sure do need SpaceX. So he might not like Elon, but the NASA program sucks so bad. And Amazon's program is not that great. He got to deal with Elon. He's got to deal with the satellites. He's got to deal with SpaceX, because SpaceX and the satellites is literally what they're using right now while they're going to war. That's what Ukraine is using right now. That's the only reason why they were able to have power, because Elon was able to provide the satellite system for them. So, it's politics that's involved, but he got to work with them. All right, let's look at, here's an interesting one. I know Anna has been wanting us to, I think it was Anna that wanted us to look at Ondas the last couple of days. Now, here's the thing, guys. I didn't know anything about Ondas until today. And now I see why you guys have been wanting me to look at this stock. And I'm surprised I didn't know about it. I learned about it today while I was watching TV. And I was like, this is the stock that they ask about every night. And I'm always like, what the heck is Ondas? What the heck is this company? Why y'all want to look at this one every night? They're like, because Joel, you told us that one of the key words of the year is robotics. Well, this is the #1 robotics company. I'm like, yeah, you're right. I should know about this one, right? I didn't, guys. I had no idea what this company does. I did a lot of research on it today. All right, so this company is called Ondas. I think it's Ondas. Is it Ondas? Or Ondas? It's Adidas, Joel, not Adidas. Adidas. Anybody in here say Adidas? I ain't never met a single individual that says Adidas. Check out my Adidases. I ain't met a single individual that says Adidas. And that's actually the name. Did I write it wrong? Did I write the wrong ticker? This is it, right? Ondas, Adidas, Ondas. That's not it? Y'all sure? I gotta go to chat. Which one of these companies, hold up. What is Ondas? Hold up. Man, that is it. It's ONDS. Ondas Holdings. Oh, am I wrong on this one too? It's robotics and drones. That is right. Y'all wrong. See, today I'm right. It is ONDS. Oh, the stock is ONDAS, but the ticker symbol is ONDS. I'm right on this one. That's the ticker symbol. No, that's the ticker symbol. Where y'all see an A? No, the name of the company is ONDAS. It's called Ondas Holdings. Yes, ONDAS. I'm right on this one. I researched it today. I'm like, I know I was reading the right thing. Anyway, let's see what it does. All right.
You wasn't watching this, right? You find it hard to believe that it didn't show up for us. That's why I'm thinking it's not on yet.
Maybe not. I thought I'd just try.
I want you to.
All right, let's pull it up. Wait, is it gonna write it big? Uh-oh. What the heck? Oh, man. Did I just delete it?
I know. What I doing that? Like, yeah. Don't be fucking with me, girl.
Hold on.
Let
me write it again.
For no reason. I know. Okay. Clicking up a storm, man. Okay.
All right. Let's pull up
There you go.
chat.
Oh, good. But it didn't look like that was on that picture
All right.
so earlier.
I should have asked, how do you pronounce it? Is that big enough? That's kind of small.
I think they have a season.
All right, I'll read it. It's kind of small for you guys. All right, here's the chart. So the chart looks pretty good.
Let's watch the 17.
And it says, what is Ondas? Ondas? Oh, like Honda? Somebody said that in the comment section. Like, Joel, it's like Honda.
Okay, now it says March
Without the
18th,
H.
but remember earlier it
Ondas.
said March the 17th. Okay, we'll check out
Ondas
tomorrow.
is a drone and wireless
Maybe
technology
somebody
company.
will upload it.
All right. But it is also robotics. All right. They do two main things: military and security drones. They own a company called Aerobotics. Aerobotics. They build autonomous drones that fly themselves. It's used for military, border security, surveillance. This is why traders care. Drones equals defense plus AI plus war tech equals hot sector. Number 2, private wireless networks like 5G for industry. They build private data networks used by railroads, utilities, and industrial companies. All right, a private internet for critical infrastructure.
So that's coming on.
Ondas is a story stock. It runs when people get excited about it. So it's a speculation company, guys. Speculative. The big old S. That means when it goes up, it does really well. When it goes down, it doesn't do well. All right, so just to know, what they do, they're into robotics, they're into drones, they're into AI defense and private networks. Put it on your radar as something to maybe trade or maybe something to own. All right, so when you look at the chart, what direction is the blue line angled? True blue, what direction is it angled? Oh, you guys can't see it. What direction is true blue angled?
I want you to cut off because I was just trying to get you the main
What
thing.
direction?
So you get on out. Oh, okay.
Yeah.
Or do you? Or hey, here you
True
go.
Blue. Oh, it's a $5 billion company. Thank you.
Do you want your laptop?
G7.
Okay. Yeah.
All right, it's $5 billion. The beta is 2.58. That means it's got horsepower. Speculative companies have horsepower. That means these bad boys move. When they're going up, it's beautiful. When they're coming down, it's not beautiful. So, if you want to know how much this company moved since November, in November, if you were privy to what they do, and we weren't, it was a $5 stock, guys, that ran, you guys ain't gonna believe this number, it ran to 15. What? You could have made a triple? A double? Triple your money. But then it fell. What happens, guys? Anything that we see, what's the rule? Somebody tell me the rule in the comment section. If you see a stock double or triple in a year, how How much is it going to drop within the next year? Almost guaranteed. Almost guaranteed. How much is it going to drop? Where is Joel buying this? There's no way I'm going to buy this at 15. It's going to drop, guys, 50% or more. Don't even holler at me unless this stock is sitting at $7.50 or $8. I ain't even thinking about buying it. Now, I would think about buying it
Oh,
if it broke
That's
to
all,
this
so we
trend
watch
line that
them.
it formed. All right, there is a solid trend line that's in place ever since July of last year. So if you came and you said, Joel, the stock didn't get cut in half, but it did hit its trend line that's been in place for a whole year, I am not going to bite your head off. I'm going to say, congratulations. You're thinking like an advanced investor. But I still ain't buying it unless that bad boy gets cut in half. Like I'm just stubborn. I ain't doing it. But if you really did want the company, I'm gonna wait using the what would Joe do method. Now the what would Joe do method is you guys gotta hit a moving average or get close to it. It didn't even get close to the moving average. The moving average way down here in the 5s. The only reason I think it didn't continue to drop, guys, was because of the war. If we didn't have this war, this bad boy was not only touching the 200-day moving average, it was probably going lower. Because usually if a stock moves 200 or 300% in 1 year and it starts to drop, it normally drops about 60 to 70% when it's got a beta that high. So I would have been buying this bad boy in the somewhere around the 6, maybe even the original price around 5, where it broke out from. But it's doing okay. It came down. People started to buy it. It hit its trend line. It rose again, and now it's breaking out again. If you want to take a shot here, guys, you can take a shot. Like that's a nice little move. It's already down, from 15 to 11. 15 to 11, let's just do it, right? Instead of me trying to figure out what the number is. If this dropped from $15 to where we are right now, which is $11.28, it's down 25% from its all-time highs. Okay? You still have some equity. So the ticker symbol is ONDS. Take a look at it. Robotics, military, drones. Take a shot at it. All right, let's look at Micron. Micron is a semiconductor company. Okay? Micron, any semiconductor company is involved is dealing with, it has to do with AI in some particular way. Now Micron, from what I remember, is also in autonomous driving. Micron just hit an all-time high today. There's no way you gonna get me to buy this at $462. Not because it's $462. It's just that you're not gonna get Joel to buy anything at all-time highs. I gotta have some equity. I'm gonna get some equity. If you want to buy something, if you have set your mind on buying a stock, buy it when it pulls back. No stock in history has just gone in one straight line and never allowed anyone to get in. Yes. There's no stock in human history that's ever done that. It's gonna stair step up. When it stair steps up just like this, you're gonna buy it on a pullback. It's gonna go up, it's gonna come down about halfway. It's gonna go up, it's gonna come down, It's going to go up. So even if we break, watch this, guys. Even if we break and we go all the way to 580, I want you guys to think about this. Even if Micron goes from where we are right now all the way up here to 580 from 462, this is why you need to wait. Even if it moves and you're like, oh my God, I missed out on this huge move, Joel. I'm never coming to your live again. Well, guess what? You know what halfway is? Halfway is right here. It can do this and still be bullish. And you know what price it came down to? The price we at today. So why buy it here if I know we gonna see 462 again, even if it goes to 580, if I'm investing in it? If you're trading it, I get it. You're like, Joel, if I'm trading it, I want to trade it to 580 and get out of it. For you super traders, I get it. But for you investors, just wait. It's gonna come back probably to the price that we're at right now. More than likely, it might move up a little bit and maybe come even lower. You might be able to get it for 400 or 354. I ain't buying it at all-time highs. You can do that. I ain't doing it. Because I know I'm going to be able to get it on sale. Look at wow, look at this. Guys, this is the good Lord. This is the yellow brick road. Look at what the yellow brick road is doing. Look at how high we are above this yellow brick road. There's no way on the planet y'all gonna get me to buy this way up here. But this is what you guys will do. You'll go in there, you'll hear great news about a company. No one has ever told you that stocks actually drop in price. Every stock drops in price. Every single solitary stock that's out there drops in price. Every single one of them. No stock has just gone up and never had a pullback. Every stock is gonna pull back. And you can figure out how much they're gonna pull back by looking up their beta. If their beta, what is the beta of Micron, guys? What is the beta of Micron, if you don't mind me asking? I don't think you should sell anything at all-time highs, because what usually happens, guys, is, and this is a real thing, do you know that Wall Street, people on Wall Street, they never sell their stocks at all-time highs? I know y'all think that all-time highs means a resistance area. It's not. Remember, stocks move in a 45-degree angle. Stocks move at a 45-degree angle, and 80% of the time, stocks are moving up or down, and 20% is moving sideways. I'm sorry, I got that backwards. 80% of the time, stocks are moving up in price. 20% of the time, it's moving sideways to down. 20% of the time.
Yes.
Most expert investors and pension fund and mutual fund owners, they're not selling it at the highs. Not if it hit it the first time. Now, if it keeps, let's say we hit all-time highs and we keep hitting it like 3 or 4 times over a 6-month to 12-month period, and we can't break resistance, that's a difference. But if this thing shoots up and hits all-time highs, you ain't gonna find no mutual fund or pension fund that's going to sell, because they know it's going higher. That is a real stat. Normally when a stock hits an all-time high, it keeps hitting all-time highs. I know a lot of you guys didn't know this stat. That's why Wall Street laughs at people that go and find the 52-week low list to find the companies that they buy. Because they're like, are you serious right now? Like, they laugh at you. Because everyone knows that if it's hitting the 52-week low, it's probably going lower. Just like if it's hitting the 52-week high or the all-time highs, it's probably going higher. You can't go higher, guys, if you don't go higher. I know that doesn't make any sense to a lot of you guys. And it took me years to get this because I thought just like you guys did. We all think there's just a limit to something that a stock can go to. No, when you break through a resistance, guys, that resistance becomes support. That's what we learned day one in stock class. When you break through a resistance, that resistance becomes support. Now, if you break that support, you fall to the next support level. But more than likely, if you break that resistance that it's been trying to go to, it forms what we call a bull flag. Look, this bad boy kept hitting highs. Look. We're looking at a chart, guys, that went from 2000. You guys are looking at a chart of Micron from, it started breaking out in May of last year. Look at this thing. It just kept hitting highs and kept hitting highs over and over and over. Every day, every week, it was hitting a new high. Every week, it was hitting a new high. And it just kept going higher. And no one believed it can continue to go higher. It's been hitting new highs for a year. Well, about 8 to 9 months. Yep, the ceiling becomes the floor. Resistance becomes support. Tomatoes, tomato. Adidas, Adidas. Ondas, Ondas. They're like, no, Joel, everybody say Ondas.
No, I didn't bring them. Okay, I got it.
All right, so we're going to change the way that we look at the market. When things hit highs, guys, and I know you're like, well, Joel, you keep telling me that I shouldn't buy at highs. Now you telling me that every time we hit highs, nobody sells. It's a difference. I'm not getting in at the all-time highs. I'm getting in
Feels good out here.
if we pull back.
really?
See, it would be silly. Think about this, guys. Let's say you rolled this stock all the way up from, let's say you rolled this stock all the way from here to here. It would be silly to sell right here and miss all of this move to the upside. I'm just saying I'm not buying it at the highs because look at what price it came down to. It came down to the price that it was right here. You see how it hit this high? And then it went higher, 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 higher. And then it came back from the same price that it was 5 weeks ago. But if I was an investor, you would have missed out on this whole move. So no, don't sell it if you're already in it. But if you haven't bought it yet, wait for it to pull back. I know it's weird, right? Because you're like, you know it's going to go down. Yeah. When you're investing in something, guys, you guys got to understand that it's going to drop 25 to 30% while you're in it. And when it happens, you just got to be able to stomach it or buy more because it's not going to go up in a straight line. It's going to try to shake you out. The stock's going to go up. It's going to pull back about 25 to 30. Most of you guys are not going to be able to stomach that because imagine if you got $100,000 in Micron and somebody says, you know, in 3 months, you're going to lose $30,000, but I don't want you to sell. You're going to be like, man, I'm selling. That's a Honda Accord. You're going to be okay because it's going to sell off 30,000. And then 3 weeks later, you're going to be right back at all-time highs going higher. You see that? You see what you got to go through psychologically? I got to be down 30%, Joel. Yeah, if you want another 100 or 200%. You sure do. Because what's bigger, 200% or down 30%? 200. I want the 200. But I ain't buying it at the all-time highs. I'm going to wait till it pulls back 30%. Then I'll jump in. Does that make sense? Does that make sense, guys? You got to stomach them 20 to 30% drops if you want that other 100 or 200% to the upside. That's why a lot of people will hedge the stocks that they're in. What do I mean by that? If you own 100 shares of this, and I think Ann Barrera is doing it right now. Let's say you own 100 shares and you know it's about to go down in price. Well, you can sell covered calls and you can earn rent on it while it's going down in price. And the rent that you're earning from renting your stock out can offset the move to the downside. I don't want to confuse any of you guys because that's what the professionals are doing. It's called selling covered calls. Or people will buy puts against their stock. So they might own Micron, and then if they think it's gonna go down in price, they'll buy some cheap puts to offset the downside movement. If they know it's about to drop 30%, they'll buy a couple of puts to the downside. They'll make money on those puts, even though they're losing money on the stock. And then the profits that they made, they can either buy more Micron or it's just extra money in their account. That's called hedging your account. That's where the word hedge fund came from. Because these new brokerages were able to come into the market, and a lot of pension funds and mutual funds can't short. They're not even allowed to short. So they either have to buy a ETF that's an inverse, which they're allowed to do, and that's the only way they're able to hedge downward movements, or they have to completely get out. But most people, most mutual funds and pension funds don't like getting out of their stock. They love holding it because when they get out, it might take weeks for them to get out or weeks to get back in. They're not in the business of getting in and out the market like we are. Okay. Yep, it does. Yeah, it clicked as soon as I said it, right? Yeah, you just got to think about how, people are, viewing the market, right? All right, so that was Micron. What else did you guys want to look at? Y'all wanted to look at Southwest. So we looked at Delta earlier. Let's look at Southwest. All right, Southwest and Delta are the only companies that I will ride, that I would fly on. Guys, I flew on Frontier one time. And I don't even think I'm that bougie. I'm not bougie. I will get on any plane. I ain't getting on Spirit and I ain't getting on Frontier. I got on Frontier, guys. And I pulled down my tray. And I'm not even lying to you guys. For you guys that have been on Frontier, I pulled down my little tray to put my food on, and the tray wasn't even big enough for my drink to sit on. I was like, what the heck is this tray here for? The tray was like an inch long. And I was like, it's no way I'm flying Frontier again. And my knees were in my chest. Now, I'm a 6-footer. I'm not like 6'3", 6'4". I got, I just made it into the 6-foot club. But my knees were all the way up to my neck. I was like, I will never fly Frontier. I don't even know where I was going. I will never fly Frontier again. Ever. So I will only fly Southwest. If even Southwest, guys, I'm like, it's gotta be like no flights anywhere, then I might take Southwest. But what direction is the moving average angled? What direction is the yellow brick road angled?
Don't sound like he does any international flights. I know they didn't go to Africa or something.
It's angled down. That means, guys, if you're investing in Southwest because you think it's on sale, it's not. It's an injured airline. You didn't know it was injured because you're now learning about the moving averages. In fact, Southwest became an injured company right around the time if Delta is injured, every airline is injured. If Delta if Delta is injured, guys, you shouldn't be thinking about none of these companies. If Delta can't make it, these companies can't make it. Now they're gonna make it. I'm speaking in absolutes. I'm speaking in absolutes. But I mean, look, guys, you would have lost money for 5 years. Like, I don't like seeing you guys lose money. Now, however, you chartists that are out there, I'm not here. Remember, the majority of the people that I talk to are beginners. So if you're not a beginner, don't get offended when I say, if you're invested in this and you're advanced and you pulled up a chart and you was like, Joel, it was going sideways and it was consolidating and it broke out of that consolidation, so I took a shot at it. Then I'm just going to clap my hand and say, great. But you are not who I'm talking to. I'm talking to the individual that looked up, saw that, Southwest was on sale. It seemed like it was on sale. You're trying to do the best that you can. You looked at the 52-week low list. You saw Southwest there. You thought you were getting it on sale because it was on the 52-week low list. You saw that it came from $67. I understand exactly why people bought it. Because when you think like this, it's straight common sense. Joel, it was 67. It dropped down to 20. It was down 60%, Joel. Don't you want to buy low and sell high? Yes. But I want to buy low and sell high when it's in this phase. See, this is the difference. This is how I want to buy Southwest. That is buying low and selling high. Healthy company, healthy environment. I want to catch it when it hits its lows. If it starts to consolidate here, I'm buying it with you.
I was sitting here and I let the TV.
But that's not the case. You're dealing with something that's not healthy, that has a yellow brick road angled down. That's not the same.
Looking at that.
It is breaking out.
Trying to drown out everything.
But look at how sharply it went down. Now you can say maybe Southwest was about to break out, and then Iran happened, and oil is causing the company to go down in price. But I also want you to think about this. If that's the case, I want you to think like a pension fund and a mutual fund. If this is the case and you have to buy an airline for your portfolio, and you have the choice to buy Delta or Southwest, who are you buying?
Delta.
I'm not going to buy Southwest. If Delta's chart looks just like Southwest, both of them were hurt because of Iran and oil, I'm not running to buy Southwest first. I'm going to buy the top tier, best of the best of breed company first. Now, if I buy in pairs, I'll buy Southwest, I'll buy Delta. If I was trading, none of this stuff matters. None of this stuff matters. I'm talking to my investors. If I was trading, I'm not going to look at a week chart. I'm going to look at something like maybe a day chart. And the day chart, Southwest started to get bullish, and I understood why my traders were buying it. Because see, now you see how I put on a different hat now? And I'm like, no, Joel, I was in here, and all I was doing was I was buying this bad boy every time it touched the 200-day. And I was getting these rips to the upside. Because short term, that's what was happening. You see how I just switched from a long-term view to a short-term view? But see, this chart can confuse you as an investor because this looks great. No, this looks great for a trader.
You know, I get out there in the morning.
Any trader that came in here could have traded the heck out of this. All they had to do was put a trend line. Watch. If you were trading this and you was using the what would Joe do method, what's the method? What's the method? You got to hit the moving average.
Even in Panama City, where I'm going,
You got to draw a line. You got to hit the moving average. And every time you hit the moving average, when you break through the trend and it goes green on the opposite side, you can take these trades. So you would have won there. You would have won here.
They like right there.
you know them, you knew both.
Because you would have been able to buy on the other side of this. But these are short moves. These are like 10-day trades. 10-day trade, 10-day trade.
Well, I hope you jump on your.
You got another one right here. You could trade the hell out of this if you were using the what would Joe do method. But this is a totally different mindset. I'm trading. I'm not investing. Because all while I'm trading this to the upside, the stock still ain't doing nothing. It's still $31 in November, $31 in April. It didn't matter. I'm just trading it options, just trading it 10 days. And I'm not flipping back and forth from a million different charts. You could have done that over and over again and won dang near every time it touched this blue line. And then you bought on the other side of it. That's what you ran off 3 trades in a row. You would have won. That's 4 trades in a row that would have won. This is 5 trades in a row that would have won. Like just doing this over and over, using the what would Joe do method, using this over and over again. Over and over again. Look at this. You would have won dang near every single time. All the way up until now. You would have never lost. But that's trading. That's Trader Joel. That's not investing Joel. You guys got to decide who you are. Like who's buying this now? An investor or a trader? Because if I'm trading, I'm gonna look at a different chart with a different strategy, with a different time frame. I'm flipping stock. 10, 15 days, I'm out. 10, 15 days, I'm out. Just like if I'm intraday trading, 10, 15 minutes, I'm out. 10, 15 minutes, I'm out. If I'm investing, I'm not going to jump in and out the market. I'm buying it, but I'm buying it on sale. Totally different mindset. It's 3 different views of the market. And I'm trying to teach you guys how to separate those 3 so you know what you're looking for. All right? So if you were thinking about trading this or buying this, this is love. You would have won every single time when it touched the 200-day and started to go up. From April until now. And now, as a trader, what color do you guys see? Is the opportunity to go up, is it there yet? But I see a bunch of you guys buying calls on Southwest right now. You're getting in front of it. And I'm like, wait. This clearly says down. And I'm not going to short here. You missed out on it. You should have been short. If you were going to short this, you should have been short way up here. But y'all want to short way down here? You can't trade with me. If that's what you're doing. And then look at how close we are to this 200-day. If we break this trend, y'all saw it happen every single time. You could have even done it here.
Yeah, she tried to get that bag.
But it's not a trade that you stay in for 3, 4, 5 months. It's like 10, 15 days. All right, I saw someone want to look at American Airlines. That'll be the last stock of the day. We're talking airlines now and oil. So, American Airlines, what direction is this moving average angled?
Get that damn bag later.
Down. You got Southwest going up. You got American Airlines going down. You got Delta going up.
You know what me and you been
This
like,
is just sitting in a channel.
Get your ass
Look at that channel. See how easy it was to just see that channel? That means they're basically shorting it at the top of this channel, buying it at the bottom of the channel. That's the easiest chart to draw. That means if you see it right here and you're going long, you too early. It's probably going down
Jackie, right?
to this line right here because that's what it's been doing.
You know, sometimes bitches talk-
Y'all see how the charts will create a picture for you? These hedge funds and pension funds are paying millions of dollars to people like me to show them this. No, don't get out yet. There's a support area where we can buy. Or American Airlines
She had a gun.
is saying we'll buy back our stock when it gets down to this support line. And we're going to buy up so many shares, it can't fall lower than $8 because we going to buy all the shares. We're going to be the plunge protection team for our own company. Y'all know stocks can buy back their own stock, right? They're looking at levels like this. I'm 100% sure that's what Salesforce did. Salesforce saw a level down here. I don't know why they chose this level, but I'm 100% sure at this area, wasn't nobody buying Salesforce stock. I promise you that was Salesforce buying. And it makes a lot of sense because they put out the word that they were buying $5 billion worth of their stock. I'm pretty sure because nobody was going to buy their stock. Nobody cared. They was going to let this stock drop all the way down to this price down here at 130. That's where, guys, if you look at this chart, there was no reason why Salesforce shouldn't have dropped down here to 125. No reason. There's no good enough reason for anybody
I
to
thought
buy
it was
this
a
stock
baby. I thought they
at
put
this
a baby in
level.
the thing. 'Cause we heard the
I
crying.
understand that, but I'm
If you look at this chart, it was almost a done deal. Now, it still might happen.
We got enough.
It still might happen. This chart reads 125.
That don't mean we got it.
That's what this chart reads. This chart doesn't read everyone should start buying it right here. If anything, this level that we're at right now, if I had to pick any level on this chart to buy, this would be the one level I wouldn't buy. This is a almost done deal to 126. 126 is this lower level down here. Because any smart pension fund or mutual fund would have been like, we ain't buying it there. We know it's going to 126. Well, I'm going to buy it up here at 180. Well, I'm going to buy it right here for 175. It's $50 away. It's $50 away. So you know what?
Right. But I guess
They didn't want to stomach another move that low. So they started buying back their own stock. That's just my theory. My theory is they started buying back their own stock. Hoping that it wouldn't continue because it was falling like a rock. A rock, guys. This stock used to be $369. They had to stop the bleeding. It was $370. It was about to go back to the price that it was back in 2022. It was going to take you 4 years. It was going back to the past. They had to do something for the shareholders. I'm almost 100% sure they were buying back their stock. Because nobody's buying it at this price.
just keep spiraling.
Get out of here.
It seemed to make it worse than what it is.
Get outta here.
And I mean,
126. Y'all see these alerts I got on the right side of my chart?
But my opinion is
I got alerts all the way down to 126.
Well, like you said, she could have had a bad day at work, and then because of that, she thought about you. What you
So
say?
this is Salesforce. Here's the thing, guys. Salesforce is like the leader in its space.
everything's spiraling out of
Salesforce,
control.
but because they're involved
What
in
I
software,
said was kind of true. To me,
they're about to make a huge investment in agentic AI. And they're going to be the teachers. What they want to do as a company is they want to come in and teach your company how to train
I ain't gonna apologize for what I said. I really didn't
your
mean to do it,
AI agents.
but I did it
See, Nvidia and them can put out the chips, but they don't have like the team that teaches you how to train all of these different agents that are doing all of these different things for your company. Salesforce is about to morph into that type of company. And they will. They have enough funds and they've been involved in it enough where they can become the leader again. And they'll do it. But ain't nobody buying their stuff right here. Ain't nobody doing it. Alright guys, I gotta get out of here before my throat closes. So I want to give a shout out to my top 10. We got G7, the one and only, coming in at number 1. You got Shaq Bully, Arwin K. Yorkie. You got Safari Don coming in at number 4. Millionaire Challenge is me, Caffrey D, Carlitos Way, Krista Agami, Zono 106. You got Raymond Games making the top 10 this week. Congratulations, Raymond. And honorable mention is S. Mickens. So if you guys can help me out with my daily goal while we put on some more Carl Thomas. We was jamming the Carl Thomas earlier.
How do you find his daily goal?
Carl. I put on my favorite song by Carl that a lot of you
Daily
guys don't
goal.
know a lot.
Okay, because I'm seeing a lot of
He would like if y'all could help him out with his daily goal. And my thing